Prime XBT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on Prime XBT in minutes.
Birb Network is an interoperable DeFi ecosystem offering token pre-sales, staking as a service, project incubation, and much more. Visit thebirbnest.com/Ferrum. Globe is a crypto derivatives exchange offering up to 100 times leverage on crypto and DeFi perpetual contracts with Bitcoin collateral. Sign up today at thebirbnest.com/Globe. YFDAI is democratizing finance by creating the most secure, transparent, and user-friendly ecosystem of DeFi products. To learn more, visit thebirbnest.com/YFDAI. Bistro is a decentralized peer-to-peer food marketplace that makes ordering food more convenient and rewarding for both providers and customers. Learn more at thebirbnest.com/bistro.
Okay, everybody, it's Crypto Birb Adrian speaking, and I'm very happy, very honored to welcome you to today's webinar. Today's kind of like a special webinar. It's going to be a tiny bit different than when compared to those which I've been already doing for months, years. Okay, and to start with, I want to give you a quick heads up about what we are going to discuss today, because I promise to actually help you get ready for what's coming in the next half of the year, which has just started, okay, with the monthly close 2 days ago. Okay, so right now we opened up brand new chapter in Bitcoin's history for the second half of 2021, which is a very special year, which might be finalizing the top time or the peak of the bull market, which in my opinion is still not over. I'm going to give you so many reasons why I think so. And to give you a brief scope, we are going to talk about the 5 tips that are going to set you ready. Okay, we're going to talk about the seasonality and the cyclicality of the markets. We are going to talk about the preparation for the technical analysis scenarios, okay, different projections. We're going to talk about understanding and how to spot the reversals. Okay, on top of that, right after definition of trading systems, on how you can define your own trading system, your risk management, and we're going to actually quote it nicely to the very end with application of trading strategy and what it means and how we can do so. Okay, so this is what you're going to have. And before we go and kick it off, I'm very, very happy and very honored, as I said. And if you are new to this very channel, to our brand new official YouTube channel of the Birb Nests, make sure you leave a subscription, leave a thumbs up, make sure you subscribe, make sure you put a thumbs up, ring the notifications bell, so that you stay tuned for whatever content we put out. And we do put it on a daily basis so that you get notified about that. Okay, leave some comments, because I'll later on try to squeeze some questions to answer. Okay, so to answer some question from you, so make sure you put some comments and so on and so forth. Okay, as you always know, to help out our account grow, our YouTube grow, because we need to trigger those YouTube algos. So smash the likes, smash the subscription buttons, and the bells, and let's go. So to start with, let's actually talk a brief moment about the cyclicality of the markets and seasonality. Okay, so what it means. Let's get it started from the very, very, very beginning. Okay, so some of you may or may not know that my main background, is chemical engineering, is a chemical technology engineering. I got master's in that in 2017, and this taught me to kind of like perceive the world in the question of matter. Okay, not even the particles, not even the chemical bonds, reactions, and so on, but having like this kind of like deeper look into what is surrounding, okay, what is going on around us. So if you apply physics and trying to understand, from the physical point of view, how it happens and how it applies actually in the financial markets, you can come up with some several very intriguing and interesting conclusions. Okay, so to start with, I want to give you a quick quick kind of like an explanation. We as people, being part of a nature around us, we consist of matter, okay? And this matter is countable, okay? It is corpuscular. I hope that there's such a word for that. But we have countable particles, okay, that build us, some chemical elements, okay? And those particles, those elements, they do consist of some smaller elements, okay? So the atoms consist of, subatomic, just fractions, be the protons and neutrons, okay? And so around it, there are many different chemical models, but, there is some layer, filled with some electrons, okay, which are oscillating around this somehow, okay? That is some, let's say, simplified version. Okay, but knowing that we consist of those particles, and these particles, like protons, neutrons, they even consist of smaller particles, which are called quarks. Okay, these quarks also consist of even lower grade, smaller matter particles, although they are not discovered just yet. But it's kind of like endless loop. You just go deeper and deeper and deeper and deeper, and you're actually never going to catch this white rabbit, if you know what I mean. Okay, but the most important part of this all is that each and every single particle of this atom, okay, of matter that creates us, it does move. It is dynamic. It is not static. It does move. It does live, and it does move in oscillations. Okay, so each and every single part of us as the material bodies, oscillates and vibrates. Okay, so if each and every single part of us oscillates, then we as people oscillate as well, right? You have a day and night cycle, you have a life and death cycle, okay? You have seasons, you have many different other cycles that probably are going on in your body, and we as people create the market. The market is this physical or virtual space, if you will, okay, where buyers and sellers meet to actually transact with each other. Dark matter as well, of course, yes. So we as people create the market. So if we as people oscillate, then if we build this market, then the markets oscillate as well, right? The markets do oscillate. The markets do vibrate, just like there is this anecdote from the early days of technical analysis. They say that one of the inspirations for behind Elliott waves theory, that is kind of like, again, implies the waves, in the markets. It kind of like assumes the markets moves like waves in the ocean. Okay, so you can tell that there is a day and night cycle, and for example, during the day, that the waves, reach only a certain distance into the sand, right, into the beach. But for example, because of the change of, from like the sun and moon, the daily cycle, it tends to differ, right? So during the night, you would have different kind of like penetration distance, if you know what I mean, right? So you have periods where this ocean, where this water actually reaches further into the beach, right? Or it goes kind of like not so far. And this led those early analysts, those technical analysts, understand that markets and then the trends move like Janusz Zachara. That is actually, he taught me the other day at the Polytechnics. That is good to see some guys from around the space. But that is what helped those people develop a theory about the markets, okay, that we move as waves, as the market. So knowing that, again, we have some sort of cyclicality phenomena going on, okay? So before I pull up some charts, I definitely want to make sure that you understand that there are some paradigms, okay, that there are some facts or main assumptions, some paradigms upon which the entire theories are built. Okay, so knowing about the seasonality, let me actually just get you to the file that I prepared the other day. Okay, very quick. Let's have a very quick hop and look into this. Okay, I hope you should be able to see my screen. So this is a file. This is a file, guys, that I prepared for my private mentoring students, for my coachees. Okay, I believe it was 2019. Okay, and this is a chart. This is a Bitcoin's chart, or actually BLX, the Bitcoin's liquidity index. Okay, it was before even 2020 started, where Bitcoin was approximately around those $7,100. Okay, let me just get you one quick check. I need to turn on the tools. The tool for the drawing kind of like disappeared for some reason. Okay, should be ready. Okay, so back to the merit. So you have this chart. Okay, it doesn't matter if it's actually not up to date or not, but what matters is that you can see the cyclicality going on. Okay, you can see those cycles. Okay, those waves up and those waves down. Okay, those bull markets sides of the cycles, and the bear market sides of that, right? Bull markets and the bear markets, and they all move. These moves kind of like come subsequently, okay, in oscillations. And if you will, by the proper definition, from the physical point of view, from the chemical point of view, what defines a cycle at full oscillation, if it happens, let's say here is some amplitude, okay, some distance, or this can be a price, let's say extension, some percentage of the movement, okay, and here is the time factor. So if it moves over the time, if it progresses over the time, then in general the cycle, the full cycle, is that's let's call it quote unquote distance, this measure on the horizontal scale, okay, on the time scale, separating two exactly same or similar phenomena, right? So you would have the market peak in here, you would have the market peak in here. So the time cycle is this distance between this, okay? And the distance, I mean in the measured in the time units. So that is the cycle, okay? Or measured from the bottom to bottom. So you know that the full cycle starts, as a matter of fact, with accumulation, okay? And this cycle ends with the accumulation, okay? If you like, we have this full oscillation. That's where it starts, goes to the extreme, right? And goes back, and that is where it starts another cycle. So you can have the sine curves, if you will, okay? But it doesn't matter too much if it's going in a channel, or if it's actually emerging, just like you can tell for Bitcoin, okay, keeps proceeding higher and higher. Each and every single market cycle high peak is higher than the previous one, okay? This is, by the way, you can tell, there was my early call about Bitcoins, literally being this early, right, where I called this stage of $7,000 at the market, being the retest of a major breakout. Okay, so actually, that is a chart that many people would probably call legendary, if you will, right? But yeah, that was way before Bitcoin actually reached all the 65,000s. So this is to prove to you that we are moving into cycles, and we have also some different measures of those cycles, right? You have Kondratiev waves, for example, which last, about 50, 70 years, and they are not even fully reported to be confirmed, right? Although there are many pros and cons, pros and against, for that. I really hope, by the way, everything is still clear. Okay. Okay, so as I was saying, you have many different measures of the cycles. You have big cycles, you have some small cycles, daily cycles, as I said. You have presidential cycles, which last 4 years. Okay, 4 years, and also within one single year, you have many different seasons, right? Most often, of course. So you would have the seasonality effect, right? The seasonality effect is something that corresponds with the fact of, seasons existing, seasons in the market. So we can tell some repetitive phenomena going on within different seasons of the year. And that way you can tell that, for example, quarterly look, you have quarter one, you have quarter two, Okay, you have quarter 3. Okay, you have quarter 4. For Bitcoin historically, you can tell that the biggest, the greatest deal of the all reversals, so the major reversals like this, okay, this is the start of a new year, like this one, this is the start of a new year, okay, of this one, this is the start of a new year. You can tell that all of these reversals practically happened within the same season, right? Somewhere around the end of quarter 4. Most major reversals in Bitcoin's history for the major impact happened and occurred at the late quarter 4 stage. Okay, so that is what we call the seasonality. What we call the seasonality is always also the fact that quarter 3 is usually the laziest of them all, right? So you can tell and expect quarter 3 most usually to be of corrective movements, usually sideways, right? And you can tell that because, well, usually this is the vacations time, right? And if this is the vacations time, then you can expect people, I'll be right back with the chart. You can expect people to actually just go on the vacations, just chill, not get too much interest in the markets, okay? And how it actually comes, and as a result to the markets is that you see way lower engagement from the traders. You see way lower volumes, okay? You see way lower, open interest as well. The overall less engagement, less interest in trading at that time. So now let's say that the world is waking up from the, and somehow recovering from the lockdowns. Okay, this may somehow imply and help us project and understand that perhaps, maybe, just maybe, of course, this is some percentage probability game, that if those people, had been locked down, for like in homes, right, not going anywhere, then just maybe, there is going to be some spike in the sudden, just last minute trips, right? Or intensified activity on like to go to the vacations, right? Perhaps some well-deserved rests needed, right? So just maybe you could assume somehow or imply that, there is going to be even lower interest and lower engagement in quarter 3, okay, when compared to the previous years on average, knowing that, in the past years, perhaps we didn't have lockdowns and now we had the lockdowns, right? So people want perhaps even more to actually compensate for that, right? And just go and chill even more. So that is somehow what helps you perhaps decide that the quarter 3, okay, this time is going to be even lazier than the past month. So perhaps no fireworks are coming, okay? So perhaps usually when the markets are within or without any interest, the market stays stagnant. It does not trend because it lacks power, it lacks dynamics in either direction, right? How can bull market, let's say, resume within 10x pumps for 10x pumps when there is nobody to buy that because everybody is chilling and getting drunk on the beach? Right? You know what I mean? So that is what defines the seasonality as well. So they say that how the January opens as well in quarter 1, that's the way that the entire year goes. Okay, they say there is also this popular saying in quarter 2 that sell in May and go away. Well, that is popular. That came from the stocks industry and not and beyond. Okay, it's not crypto, but well, have a look. We topped out at $65,000 at least locally. I'm not claiming this is the top. I'm actually claiming otherwise. But locally we peaked, So technically, practically, if you follow the seasonality suggestions, then you walked away, sold in May and walked away, right, in quite a good bunch of profit. So this is the seasonality effect, okay? And on top of that, let me just very quick introduce to you this website of ours, of course, the Birb Nest, okay? And we have tons, insane amount of free resources, newsletter, webinars, of course, just like this one, podcasts, not to mention my blog, when I post on a regular basis, this is an actual article, right? But when you can see read insane amount of articles, my personal trading reports. Okay, so this is all free. But if you go to the infographics, then there is this seasonality effect kind of like displayed in one of our cheat sheets. Okay, let me just find it. And that's how we called it actually altcoin hype cycles. So Bitcoin, just like overall all global markets, are correlated. All global markets are correlated. Bitcoin is correlated to what gold does. Gold is correlated mainly to what dollar does, and so on and so forth. It's like one network, right? It's one big network, unless there are barriers and some embargoes or some difficulties at the borders, not allowing from the regulatory point of view to trade. Then unless that exists, you have kind of like a freedom. You are supposed to have some form of a free market. Okay, so the capital fluctuates and moves. Okay, it never stays in the same place for too long, because when it stays for too long, then the market gets overheat. Right, the market is really getting the proper overheat. And you have the market which is overbought. If everybody buys, then you can only sell, right? So what's the point of holding and giving away all the entire money, then profit that you made? So knowing of that, again, you can know that there are certain seasons, certain times of a year or years, okay, where some assets perform better than the others. Like, for example, just right now, there might be amazing time for commodities. Okay, now of course locally, because of dollar actually, started heating up a bit, but there has been. This is a monthly chart for the commodity index, just to give you a scope. Okay, so this is a 50-month moving average. Okay, 50-month average, and this tells you this is actually a volume-weighted average price. Okay, so you can tell there's been some golden cross going on the monthly chart. So this time, this actual breakout that occurred in February this year, right? This very first breakout that occurred in February hadn't happened before it did ever since 2013, or should I say 2012 even. This was the last actual upside breakout, okay, until now. So you are talking about unprecedented event. The first time in matter of 8, okay, or 9 years, we saw a massive upside breakout on the commodities from the technical point of view. So like this is some legendary bull market signal, right? So first time in years, it actually broke to the upside. This is something that you cannot ignore. Okay, so knowing that, again, it somehow defines the monetary policy for Fed, and what they do with dollar, they stimulate the commodity markets as well this way, right? Perhaps my theory is that the gold was actually getting too expensive, and gold being the most strategic and the most essential important asset upon which the entire countries are built, for the monetary policy safety, right? It's confirmed that the central banks have been accumulating in the past decades gold like crazy, okay? Because if things go down and things go south, if people lose faith and belief in the currency, okay, this is where hyperinflation starts and the countries may go bankrupt, okay? So it's very important to have gold in store. And it's in countries and states' favor to keep gold prices rates low. And gold's apparently was doing too well in the past months. So they promised, or they announced this was a news play. Fed announced on the press conference that they're going to potentially make first steps towards hiking the interest rates in 2023, which is in my opinion just only the FUD, because with this amount of money ever printed, which is 23, I believe. Approximately 27 to 30% of ever printed money was printed in 2020. So all the money that was printed in decades or in centuries, so we printed about 30% of that total number just in the past year. Right? So that is what definitely just brings the potential of insanely big inflation. Okay, the only element lacking is somehow the accelerated spending. Okay, so one way or another, the gold prices, the countries hate expensive commodities because it's kind of like the commodity prices. When there is a country rich in commodities and the commodity prices rise, okay, then it may actually just destroy your export if that is your main source of income from the economic point of view, right? So this is some serious stuff. So there is a season where commodities are going to do better, okay, than not, for example. And back to the seasonality infographic, you can tell that similarly, altcoins and Bitcoin, they do have some better performing months and seasons. Okay, so you can tell that usually on average, the quarter one, okay, starts with some serious dips. Okay, the quarter two, well, comes with usual solid dips opportunities as well. Okay, so right now we are in quarter three. Of course, this is some average situation, so don't apply that literally that if it must bottom out for every altcoin in 15th of, or not even 15th of, or like middle of May, otherwise it's not going to, it's wrong, right? This is just some average picture. But the altcoins, they intercorrelate with Bitcoin, and Bitcoin intercorrelates with gold and dollar, just like I said. So there is a cyclicality in the seasonality in a way that whenever altcoins, as the entire market cap, let's say you have here the market cap of altcoins, okay, you can tell this is I believe 200-day average. Okay, this is a daily chart. So we can tell that altcoins as the industry, as an entire group of assets, okay, declined ever since May 15th, okay, by, well, top to the bottom on average by 52% on average. Okay, if you apply some extreme values, not just the daily settlements, let's say, you have almost 60%. Okay, so that is some large numbers. So you can tell that this is definitely some dip, and the last dip of this kind, apparently, well, from the nominal point of view, never happened before because we are large as a market. But from the percentage point of view, it probably happened before, let's say, where the COVID crash, right? You can compare that. So there was very similar volatility. There was similar downside volatility for altcoins. And that historically shows you that the best reversals on the market come after severe discounts. Okay, so there is, after each and every single, where is this chart? After each and every single massive downside part of the cycle, okay, you can expect this to somehow bounce anytime soon. And on average, you can tell that there is 50 to 60%, at least in this bull run, discounts. So this gives you a scope, for example, for what to expect for altcoins in the next months, in quarter three perhaps. You can also tell that there is a correlation with between Bitcoin and altcoins, right? So whenever Bitcoin is the king, whenever Bitcoin outperforms altcoins, it's safer. This is shown in the dominance chart. Okay, the dominance chart it's not the dominance chart that defines this, but the dominance chart is a result. Okay, you cannot trade the dominance futures. So this, as it doesn't work as a self-fulfilling prophecy, it's not having causation, right? So I think there's it's kind of like pointless to bring this entire superposition effect one more time to this, because I explained it so many times already. If you guys want, there was a video on YouTube that I actually did about that. And I do believe it was there. I do believe it was explained somehow, either on my last Friday's webinar, which is this one, or the one before. Okay, so the superposition effect is something that defines the profitability of altcoins and its correlations with Bitcoin. So make sure, guys, you actually scroll through the videos because there is so much insane content. I'm not going to repeat myself too much here right now because of the time limitations. Okay, guys, keep it calm in the chats. Okay, let's stay respectful for everybody. But that is the fact. Okay, so we have to, as the tip number one, accept the seasonality, accept and take it as something that is granted. Okay, the cyclicality and the seasonality exists. Okay, that is something for you to understand. Then, moving on to the point number two. Okay, we should prepare some potential scenarios for the next quarters to come. Okay, because that is much love, Hamza. I love you back. Yeah, like Hamza is a very, very passionate member of the Burbness. I'm very happy to always see him in the chats. Well done, buddy. We have to prepare as point and tip number two. Get ready and prepare for potential scenarios. For what's coming in half two of this year. Okay, so having that in mind, let's say this is Bitcoin's chart, of course. So let's like this is some average going on. Okay, we can even close or hide the B Pro and instead turn the simple moving average, like just for your better understanding. Okay, this can be 20-week moving average. Let's say 20-week average. Okay, let's get it this way. This way we can actually even, I don't know, make it like 50, right? Just not to get too much. We can even have it as a daily chart, perhaps for your better understanding. Again, just we don't care about daily fluctuations, so we smoothen the chart out with the help of the line chart. Okay, well, I'm checking constantly back and forth if it's all displayed because I tend to forget about pressing this screen sharing kind of like thing on the streamer. So I hope it works. Having it here on the main 200-day average. Okay. Preparation for quarter three and quarter four. So based on the point number one about the seasonality, you can already project some potential scenarios coming. Okay, you can already project something that may potentially happen based on the historical records, right? Because me, as a technical traders, as a market technician, as a certified technical analyst, I choose to rely on the history. I claim that the history is the best teacher. Okay, so knowing that, I'm searching in the past reactions, in the market's price, to try to somehow project what may come with the greatest deal of greatest amount of probability, greatest chances, odds. Okay, so knowing that quarter three is usually corrective in the meaning of sideways. All right, there are even bigger chances that we're going to go sideways in this quarter. Then we have already, understanding or some information about the extremes on the markets. Okay, we have some trading range established for high time frame. You can tell this is extreme high and extreme low somewhere in there. Okay, so far it's not broken. I still believe whatever happens in here, if it just sweeps the low again, now I still believe Bitcoin is way too over or undervalued right now, underpriced, and eventually it is supposed to go back towards the mean reversion, which I also explained quite thoroughly, and many of you enjoyed that on the last Friday's webinar, which I displayed like a moment ago. So make sure you actually just go and discover all the past web videos. Okay, so I'm not going to waste time or repeating myself this time. But at one point, whatever happens in here, the mean reversion suggests that Bitcoin is going to be somewhere around the average, because the average price of Bitcoin is about $45,000. So at one point, whatever happens, in my opinion, is going to come sooner than later. You're going to have Bitcoin at $45,000 or approximately these levels. That is how it works. Whatever goes extremely below the average, it's a buying opportunity. Whenever something goes extremely over the average, just like it did here or here, it usually comes with a selling opportunity or here, right? So you can have an average, and you can tell that whatever goes too extremely high or too extremely low, it generates some trend fading opportunities, let's say, right? the extreme, you can short the extreme volatility over the average, and you can buy the extreme volatility under the average. That's how it works, the simplest mean reversion system. But knowing that at one point it's going to probably retrace, or should I say pull back to the upside, okay, towards its medium level, so $45,000, okay, knowing that we also have the extremes defined between here, between this 28.8 and the $65,000, this is defining our trading range and our area of interest. So you can expect perhaps in Q3 to not to be kind of like lazy, right? Based on what we discussed. So you can expect this market perhaps to, knowing that the mean reversion is supposed to happen, expect it to oscillate somewhere between, first of all, $30,000 and $45,000, or even, here's the next resistance, like $50,000. So it may actually oscillate around, between $30,000 and $50,000, okay, for Q3. And if you look at it, of course, this is quite likely, because this $50,000 kind of like a region, okay, which is here, approximately here, let's say, is somewhere in the middle, as the main reference point for the entire volatility of this past months. Okay, I hope that it makes sense to you. Yeah, and kind of reminder, guys, if you are new to this channel, I very much appreciate your likes, thumbs up, hit that subscribe button, smash the likes. We need to kick the YouTube algos, kick it off. So go for it, guys. I truly appreciate it. And back to the merit, okay? Knowing that this is supposed to be lazy, we are most likely going to oscillate in Q3, okay, somewhere, somewhere between the low, okay, and the medium point, the mid reference point, which is somewhere approximately between $30,000 and $50,000. So that is one potential scenario, okay, that we oscillate and suppress the price action inside the lower part of a range. And this is scenario number one. Okay, the scenario number two, with the other color, if we will, we can go with I don't know, like red one. Okay, or I don't know, let's do blue one perhaps, okay, so that it doesn't bring you bearish associations. Okay, the blue one is saying that we could perhaps just oscillate somewhere higher in this. Okay, we could perhaps jump over that 50,000 kind of like a region, and we're going to oscillate in the upper half, okay, the upper half, UH, and the lower half. Okay, so there is a chance, as the scenario number two, that we are going to oscillate over or at the average or over the average. Okay, scenario number two. Scenario number three, which is quite unlikely to happen, but you should always be ready for that, because you never know, if the aliens, Martians kind of like attack Earth, or there's some asteroid kind of like crashing into Earth, or some military conflicts like expanding and emerging, or some I don't fucking know, like some dinosaurs come alive. Like, who cares what that is? And what I'm saying is that you could never be 100% ready. You could never be 100% certain. You should always be 100% ready, okay, and do as much as you can to actually protect your capital. Okay, so you should project some most probable scenarios. So for you, knowing that we are supposed to be training in the range for the Q3, those are the two kind of like main, projection scenarios for trading in a range, assuming that we're going to trade in a range. Okay, but if things go south, let's say, USA attacks some China, places, I don't know, just put top of my head, right? Or some, again, another Israel and Palestine kind of like attacks, right? Or whatever other piece, like side of the planet happens to be in fire. This is going to affect the markets definitely. And if something like that happens, then nothing is going to stop. All my projections go to trash, right? Because nobody's going to stop selling just because I put a bullish chart, right? Nobody cares about that. So you should always have that in somewhere on the back of your head. And knowing that we're still, let's say, with the highest degree of probability, highest probability chances and odds that we're going to stay in the range, this is what defines the most probable two scenarios for us for quarter three. And what about quarter four? What about quarter four? Okay, so quarter four, usually based on the seasonality, is the most volatile or depth volatile period after lazy quarter three. So you could expect, in general, in quarter three, altcoins to perform not so well if Bitcoin remains here, and well, if it goes sideways, either around this medium point or over that, it's going to build back the certainty in the people, and it's going to cause altcoins to recover way more than you could expect. But moving to the later part, to the quarter four, as I said, there's always the chance for you that, knowing that for all so many reasons, which I keep explaining on YouTube and in the Birb Nest, explaining on the exclusive corners, in the video reports, and where not. Okay. Hope it all displays. Okay, perfect. There you go. You could expect most likely the upside breakout. Okay. I do not believe bull market is over. There are so many reasons to believe this is not over. Okay, you have the divergences, which I post on Twitter. Very quick check. Okay, the divergences. Like, long story short, this is the third time that Bitcoin's been this undervalued, this oversold in the past 3 years. Okay, so on top of that, we have daily divergence. Okay, on the momentum versus the price. So it tells you that the bears are exhausted already, big time. And whatever happens on the intraday basis, I'm not going to tell you what's going to happen to Bitcoin in the next 5 minutes or an hour or a day or a week or a month even, right? But I'm kind of like rarely ever wrong about the long-term reversals. Long-term fundamental values is what defines the trends, right? The daily movements, intraday movements, price action, this is just a noise to that. So okay, again, bringing back this range, that this can at one point break up, most likely, in my opinion, quarter four, just like it usually did for the historical records for Bitcoin seasonality to favor Bitcoin in late quarter four stage. So we could expect the upside breakout of this range, okay? And the technical measurement based on the measured rule movement, you could expect this move to bring you about $30,000 movement towards the upside, which is going to place you somewhere between $90,000 and $100,000 for the potential all-time highs. But it usually goes, overextended, just like it does overextend, the downside movements and the extreme fear. It does overextend the upside movement in the extreme greed as well, right? So it may happen that we are going to overthrow $90,000 or $100,000, which is going to be definitely huge, amazing resistance to break, and insane milestone, okay? From 5 figures to 7 to 6 figures. So huge emotional, psychological attachment and resistance. You can expect big sell-off like before 100K. Okay, but my guess is $90,000 to $120,000, for the peak. Doesn't matter. That is the bullish scenario. You can tell, for example, that if that happens, you should be ready, right? You should be usually accumulating something that is cheap, something that is oversold, something that is valued, rather than something that is very high in the price. So you should be buying this, okay, not this. You don't buy into developing trends. You actually usually buy something after it declines and not after it rises. So again, knowing that, you could expect the scenario number 3, the projection number 3 for quarter 4, okay, to be rather bullish. But again, if things go south, right, for the same reasons, unpredicted events, black swans, some big conflicts popping up, then you could expect this to come down south, right, and prematurely the bull market. So if something like that happens, by the way, I do believe that the upcoming bear markets bottom is going to be somewhere between $10,000 and $14,000. You can actually screenshot that or record that, remember that simply, so we can compare later. You could expect, at one point, definitely Bitcoin to be way lower than it is right now. But in my opinion, it's not going to be this time just yet. Okay, I may be wrong, but that is something that you should be ready for and prepared. So if things go south, you should always be ready. Okay, for Q4 being kind of like that destroying the Bitcoin, right? And if that happens, you should have some proper active portfolio management. Okay, you should never be all in. You should plan your investments. Okay, so in case the scenario number 3 doesn't come up, right, the scenario number 4 is something that you should be ready for. Okay, so here we just kind of like discussed a couple of potential scenarios, projections that make the most sense to you. Okay, and that is how you can plan your trades around that. Okay, it's very important. It's very important. Moving on to the third part, because we are actually squeezing time already. Let's talk a brief moment about spotting reversals. Okay, so I'm going to give you a couple of points, couple of ideas on how you can spot the reversals. So you can spot the reversals based on many different indicators. All right, let's say, to start with, volume spikes, right? Abnormal volatility. Abnormal volatility is something that usually abnormal volatility and moves on the exchanges. I hope you can see that, but actually, you know what? Let me just make it grayish black. Hope you can see that. The volume spikes, which is usually at least required to be 3 times as large as the prior bars, which makes sense here, here, here. Those that stand out the most. That is what defines, or here, right? That is what defines the major reversals. So we can expect the reversals to happen when the biggest amount of trades occur, because volume represents the amount of trades, the number of trades that actually is covered and closed. Okay, so the volume spikes is the point number 1, as the way number 1 to actually predict the bottoms and the main reversals. Okay, something that you could imply in here. Okay, where do you have it? There we go. So volume spikes. If you see the volume spikes going on, like here, not even necessarily here, but like main volume spikes, this is what liquidates usually the biggest amount of people, what means the biggest amount of trades closed, okay, the biggest amount of transactions. So if the biggest amount of transactions happen somewhere around the bottom, right, this is what may be defining the potential upside reversal. If something like that happens around the peaks, this means that the biggest amount of buys have just occurred, and perhaps the market is overbought, right? So that is how you can actually just have your insight into market reversals. Way number 2, you can anticipate the reversals based on the very simple stuff like a trend line. Okay, very simple stuff, so that that when there is a trend line, which is a line that shows you a trend is broken, right? Then this is something that may tell you about potential results of that, right? So if we actually, let's say, have a couple of trend lines, of course, you have to adjust those trends if they accelerate, let's say, right? But there is one. There is 2, because the market accelerates. There is the 3rd trend line, okay? There is the 4th trend line. And you can tell that each and every single trend line like that, we can actually just, again, have it somehow longer and extended, so that it tells you, gives you bigger picture. You can tell that the steeper it gets, the easier and less time it takes to actually break it, right? So you can apply something that is called the fan principle for the trend lines, so that that this is the longest trend line. Okay, this is this, and this one is a medium term trend line, and this is the shortest term trend line. Okay, these were so you can anticipate that if here the breakout occurs, let's say like, let's give it here, okay? If the breakout occurs in here, okay, or here exactly, then you can anticipate that short-term trend, short-term direction is going to change. If this is a medium-term trend here or here broken, okay, then you can anticipate this is going to have medium-term results, okay? Same way for this trendline breakdown, right? And this trendline breakdown. So you can expect the market reversals based on the trend reversals, based on the trendline breaks in a simple manner. And same way you can anticipate the breakout or trend change, in this, because we're locally in the downtrend, right? So you have the most the steepest trend lines, here the anchor, the next point, well, perhaps better adjustments, but here you had the breakout. Here you can call it perhaps a retest, doesn't matter too much, but this is the next trend line for now for you to break, right? Which it actually did. So you could anticipate some breakouts, but if that long-term breakout happens, then you can anticipate long-term results of that. So point number 2 on the list is trend lines, applying the trend lines analysis, okay, and the breakouts on the trend lines. Very quick point, the mean, right? The mean, which is the average. This very average that you can tell in the chart. So you can tell there is potential, where do you see that? Aside from the deviations, because trends do have deviations, especially if it's some lower grade trend line, like MA50, let's say, okay, some count. So we can tell that we can make this one black just in case. Okay, so there is no confusion. So we can tell that these 50, the short-term trend lines, they do have deviations. You can see a lot of, oscillations around that, right? And not every signal, not every crossover of the price over the mean is an actual breakout signal, but you can tell that, let's say, whenever the market breaks the average, okay, this may potentially, especially if it happens after a series of insane rallies, okay, this is something that you should be taking with some caution, right? You should get ready perhaps to take some profits off the table, right? Many, like, that is actually hilarious, because 2-3 days like before the market peaked, I actually cashed out to get my R7. So I technically sold the top of that, but whenever the signal appears, you can anticipate the mean reversion to the average, the moving average, to tell you and indicate the potential trend change, right? So be it in the one direction, just like it did over here, right? When it actually pressed upwards and it broke the average, right? Same way it did here, that it pressed down and it broke the average, right? So the mean is how you can actually just get the reversals right as well. A very quick point about the volatility, right? There is a ATR, average true range, way of measuring the volatility. We can actually just have it as a histogram, perhaps. So the average true range shows you the true price, the daily volatility over the past. Long story short, the daily volatility over the past actually 14 days. Okay, the average volatility of the past 14 days based on the true price, true range. So you can tell usually that the market gets the biggest volatility on the tops and on the bottom. So if you go to the highest kind of like time frames, you can tell that the highest volatility, abnormal volatility, is something that you meet on the tops, and abnormal volatility or the lowest volatility means that there is no interest in the markets, right? This is going sideways. The lowest volatility means the lowest amount of changes in the markets, the laziest market. So the biggest abnormal volatility, okay, tells you and defines you the actual local peak at least. So it works in a similar way on a spikes, spikes, kind of like those hills that can anticipate and imply this way of thinking in order to predict some tops and bottoms, okay, some major reversals. I need to rush in that because there's so many points actually. But patterns, of course, right? You can anticipate the reversals based on the price action patterns, right? You can anticipate some head and shoulders in here, right? With some complex head, double top head, if you will, right? These two peaks actually constitute and create the head, and this is the right shoulder. You can anticipate a breakdown, right, and so on. You could anticipate some upside breakout after this bull flag, just broken. So the candle patterns, the candlestick chart patterns, is something that actually helps you define reversals. Here locally, you had some head and shoulders or a range, right? Here you had some actual failed rising wedge, if you will, right? Some rising wedge which actually failed, right? Usually rising wedge is something that people expect to go south, but when it fails, the statistics suggest that failed patterns perform even better than the regular patterns. So we can anticipate the reversals based on the patterns, based on the sentiment. Okay, so if we go to the fear and greed index, which is something that I often bring, okay, you can tell that the extreme fear, like the entire past, like what is that, since it goes way let's go for the 1 month, the 3 month, ever since the May 12th. Okay, we've been seeing like some extremely low, historically low sentiment. You can tell that this fear and greed mainly points out to the direction of the fear. Like people are extremely scared of this market, and usually people are scared just because they lost money on that. So if they lost big amount of money, the more they are scared about that, and the more probable the reversals are. Right? So that is how you can anticipate the reversals. You can tell that the biggest reversals occur in the market whenever the peak reversals. Okay, whenever the market is extremely how to call that, greedy, extremely euphoric, right? Like here, okay, June 2019, or here May 2021. Like it doesn't show up the 2018 or 2017 peak, if you remember, but there was some extreme fear, extreme greed going on. People were talking about $100 million Bitcoin, coming in the next month, in a subsequent month, right? So like everybody was dreaming of Lambos and so on. So the fear and greed index is something that actually helps you project the reversals as well. Fake outs. Look how fake outs. I actually did the full fake out explanation on the last Friday's webinar. Okay, so go for it. I actually covered these fake out analysis and the professionalist breakouts. Okay, I really spent quite a good time of explaining the mean reversion and the fake professional breakouts, right? Or specialist breakout, just like it is popularly and widely said. Okay, so make sure you actually go back to these materials. Yeah, but speaking of fake outs, I do refer to, let's say, this, right, where locally you would have the fake out, and usually the fake outs also bring the biggest volatility and the biggest amount of liquidations, which is what makes the markets reverse usually, right? So knowing that there has been some few subsequent fake outs after a massive decline, which is abnormal volatility to the downside for Bitcoin, which is rather rarely met. Okay, then perhaps it tells you that the bears are trapped and they're going to be forced to close their shorts, perhaps, which is going to create a short squeeze and it's going to level out the prices, right? So the fake outs may actually bring you some ideas. The derivatives, not to spend too much time on that, but derivatives options, you can observe the futures and options. There is my good friend who's actually analyzing actively options, TED Talks Macro. Okay, he actually spends like very solid shout out to him, but he spends a lot of time explaining the options volatility. Okay, and what happens in the derivatives market. So based on the options, based on what happens in the markets, you know exactly, for example, how the institutional money just feels about that, right? Because let's say the very simple stuff. There is something in derivatives that is called contango and backwardation. The derivatives is an instrument, a financial instrument, which and its price is derived from the underlying asset. So derivatives, the Bitcoin futures, does not equal Bitcoin spot. Okay, it is two separate entities. So the prices may vary because the prices are defined by the demand and supply. So the demand and supply for Bitcoin may be different than demand and supply for the derivatives of Bitcoin, for the contracts, for the documents, okay, for the papers. So contango is a situation where futures are more expensive than the spot price, right? So it tells you, for example, that there is a bigger demand on the futures, futures contracts than the spot price. And this indicates, for example, that at one point there is an arbitrage opportunity, and this arbitrage opportunity makes this market partially efficient, and it actually just goes equal at one point, and it meets. They meet somewhere. The futures price and the spot price is not going to stay different forever. It's going to, because of the arbitrage, and the price difference, there's going to be an investment opportunity, and this is going to go meet at one point. Right? Hope it makes sense. So there is a contango, and the situation which is kind of like opposite, reverse, is called backwardation, and the futures are less expensive than the spot price. Okay, it means that there is lower demand for the futures at one point than for Bitcoin. So it may tell you and indicate, for example, some short-term downside expectations, right? For that, you should always be ready for some economic, some big macro indices. Let me actually just show you of this chart. Let's actually see this. Perhaps, hopefully, I'll find that. Oh, there we go. Right. Look at the date, February 27th, 2020. So this was the tweet. This was the projection that saved many people from crash, because it was before the crash happened. Okay, so I was paying attention to CEOs stepping down. I was paying attention to main two divergences from the Dow Industrials and the Dow Transportation that would happen. And based on the CMT Association's materials, which is what I'm trying to accomplish later this year for the full designation, I get 2 grades out of 3 so far. So that is what defines the major warnings from these largest markets. Okay. From the equities, that there's market overheat. Again, the market is overbought, right? That one doesn't catch up with another anymore. They start trending in the opposite directions. Okay, so that is what actually is something that you need to encounter. And if something like that happens, okay, then perhaps you should, perhaps withdraw some money and get ready in cash, just in case. Okay, so that actual tweet was talking about the crash. Okay. And Bitcoin being still cheap when it was trading somewhere around $7,000, $8,000, $5,000. Okay, February 27th. This is an actual tweet. You can search for that. Okay, the point number 4. Okay, because point number 1, again, to kind of like remind you, was to accept the seasonality. Point number 2 was, as the tip number 2 was, to prepare different projections for quarter 3 and quarter 4 based on the seasonality, based on the point number 1. The point number 3 was to understand how you can spot the reversals. So many different techniques and ways. Point number 4 is on definition for your trading system and risk management, right? So you have to define your trading system. And there is, let me just find it. Okay, the trading system, let me just find it. Complete trading system. Trading system is the way you make money as a trader. It's like a business model for a company, how you make money, right? So it consists of a couple of decisions, and respecting those decisions with regards to what market, what to buy or sell, position sizing, how much to buy or sell, entries, when to buy and sell. And here's, for example, TA, right? The technical analysis doesn't give you the answer what, doesn't give you the answer when. It does give you the answer when, right? The answer what comes from the fundamental analysis. You pick what to trade based on the fundamentals, but you pick when to trade based on the technicals, right? And where we are here right now, we're actually kind of like already extended this webinar, and I hope you appreciate it, because there's my wife waiting at their home. Hope I don't get fucking beaten in the face for getting late. But make sure, guys, you compensate it somehow. Smash the like, smash the subscribe button. Just leave some kind comments if you enjoy the knowledge that I'm sharing, because my wife is not going to be happy about that. Okay, so hope you compensate that somehow. Uh, Stop losses, right? The exits, what defines your exits, and tactics, like based on how to buy or sell. So just like I was saying, the tactics, the techniques, if you use the volume, if you use the trend lines, if you use the mean, the average, the volatility, the divergences, okay, on the momentum, just like I mentioned with the RSI divergences on the daily chart against the price. Like the fake out sentiment counter trading, okay, the derivatives deviations, economic indicators like the interest rates and so on, okay, or the on-chain hash rate, active addresses divergences. So you have to define and get ready for your trading system, okay, so how you make money and how you design a system, understand what system will do, okay. So you have to have some goals ready. You can use the SMART acronym, right, so that your goals are always specific, measurable, achievable, relevant, and time bound. SMART acronym, go for it and read about that if you cannot recall, right. Do not have an opinion on the market. A mechanical system will react, so whenever the system predicts or gives you a signal, you just follow that, right. uh, Realize losses that occur, right? The losses will occur. This is official materials, okay? The official trading materials tell you that the losses will occur no matter how hard you try. You're never going to have 100% win rate, okay? Just make sure you remember that. Okay, realize the profits always. Realize that your emotions are actually fading and distorting your vision, okay? This is what actually makes you lose money. This is what makes people, the emotions are what makes people to buy into the peak and sell into the bottom. Okay, be organized and disciplined in developing and following that. Okay, develop a plan. Okay, and test it. How you can know whether or not it is successful or needs change if if you don't really measure that somehow. You have to measure your win rate. You have to measure your risk management. I should say applications, right? You have to have a good risk to reward ratio so that your odds are always in your favor. So that you just don't trade to be in a trade alone. You just will trade to have money out of that, right? So you pick only 3-to-1 risk to reward ratio picks, all right? Or you apply or define your position sizing, right? How much money you can actually just put and risk in that. So 2-3% risk per trade, perhaps, or 5% risk if you trade higher time frames. So that is all coming in definition for the trading system, okay? And point number 5, the final point that I guys got ready for you today, okay, is something that we call a trading strategy that is different, okay? That, listen up, trading strategy is different. It is not the same. It does not equal trading system. So trading strategy, okay, defines or is defined by the time frame, by the time scope, okay, by the time scope of your trading. So what time frame you are focusing on. You can tell that I mainly showed you so far the higher time frames, like a daily chart, okay, or a weekly chart. I didn't pull really like hourly candles. I didn't pull 4-hour charts. I put mainly these because those are within my area of interest. Okay, and I tell you what, it's easiest to make big money while zooming out and focusing on the higher time frames. I promise you that. I promise you that. Okay, I've been there. I've done that for the otherwise. And I can confirm that 90% of people statistically lose money because they choose to day trade. They follow these fake stereotypes, feeling that they could run away, from their work, 9-to-5 jobs, and then become day traders, and everything in a wonderful way just happens, right? And you wake up rich. You just click a finger and you wake up rich on the next day, right? That's not how it goes, guys. That's not how it goes. That's not how it works. Okay, so let's be honest. So the trading strategy, right before we finish off, the trading strategy defines and comes with your time scope. Okay, so you can define a couple of different time frame based strategies. Buy and hold, which is something that Warren Buffett got his fame for. Okay, he got super rich because he held to his Coca-Cola shares and Amazon shares for years and for decades. Okay, he didn't do that because he was day trading in his basement 50 times a day, clicking 100x leverage long or short one after another, right? He got rich because he was holding on to his plan, believing that there's a valuable peak. Okay, he was also his mentor was legendary Benjamin Graham, so he was having a good basis, for the fundamental value investing. So again, buy and hold is what usually defines the best profitability for the people. Okay, the lower the time frame you choose to trade, the less profitable you are. These are the facts. Position trading. I'm a position trader, so you check on your portfolio health once a month and decide, about your having the trading the longer term views and pictures. Okay, you still can do some small readjustments and resettlements on some monthly basis, but you have your overall discipline and time frame defined for the long term, right? You can trade swings, the secondary swings, right? So whenever the market, there is this fractal nature, which I also explained on the last webinar, right? The bull markets and the bear markets, they do consist of lower grade trends, right? The secondary trends. And these secondary trends consist of even smaller trends, which are the tertiary trends and tertiary fluctuations. Okay, so you can trade either this or this, right? Or even focus on the even lower parts of that. But the lower the time frame peak, again, the more troubles you would have. So swing trading is that you trade those secondary swings more often than not. Okay, you can apply that in some different time frames as well, but usually it does refer to the secondary swings. Okay, so you can have a day trading as well as an option for your trading strategy. You can be an intraday trader, okay, or a scalper, if you will. So that is for you to decide about your trading strategy. Okay, you have to understand the profile of your strategy that is going to keep you profitable on the long term perspective, because you are not a good trader just because you won one trade, okay, but because you are profitable after 500 trades. That is what classifies and makes you a good trader. When you win one trade for 500%, you're just lucky. Right? Try repeating that over and over again, and you're going to notice on your, like, with your own poverty, that this is not going to happen this easily. Okay, high risk gives you high rewards only. So if you risk highly, you're going to lose highly as well, most often. So guys, this is something that I brought to you today. As I said, my wife is going to kill me, so I need to be running back. I really wish I could answer your questions. I didn't make it enough in time, but I want to offer something to you to somehow compensate for your questions which were not answered. As you know, we're actually having the Birb Nest, right? One of the most reputable trading communities, the largest trading groups ever since 1217. Okay, I founded it in 2017, and we've been through the bull markets, bear markets, FOMOs, FUDs, peaks, bottoms, all of that. Okay, and we've been nothing but growing extremely fast, which is a result of our success as the professionals in the space. Okay, so if we were not a good traders as the whole, then we would not be here today, probably. All right, because we would be broke dealing with other 9-to-5s. So if you have your questions and I didn't make it in time this time, which I'm sorry for, I'm giving you 7 days free. Okay, 7 days free in the Birb Nest with all of the educational channels, with all the exclusive resources, with all my personal trading journals, with market scanners, okay, for crypto, which is going to load in a second. Okay, just saving you so much time, literally, for knowing what is worth longing or not. The legacy scanners, in a similar way, we are literally going crazy about legacy markets right now. Whenever crypto, if crypto is boring, we switch to the legacy markets, to stocks, equities, to the forex, the currencies, commodities, and whatnot. Video reports, okay, you're going to get video reports where I actually explain personally, how you can, prepare yourself for what's coming, okay, within the week, and so on and so forth. This is all included and it's 7 days free, no credit cards required. So if you are serious about your money, if you feel you could improve your trading, okay, make sure you actually go to thebirbnest.com. Okay, just let me actually very quick display that in here. Okay, make sure you actually go there, and and I see you in the nest. Okay, 7 days free, no, not costs you nothing. Then if that finishes, you can actually choose if you want to stay. If you want to stay, but there is a big surprise coming, so stay tuned for that. But you can choose to stay, or or just go your own way, right? If you don't like it, nobody's going to judge you about that. So the condition, I'm not going to accept everybody. The condition is for you to be serious. I'm not having the time, not my team, we don't have time to actually cope with you if you're there to fucking goof around or just play around, or if you want to bring your toxicity, if you want to just go and call out everybody because that's what you do for a living, right? We don't have time for those scammers. We only have time for the truly dedicated people who are passionate about their improvement, who want to learn and educate. And if you are a good fit for us, right? It's not even us being a good fit for you. It's you that needs to be a good fit for us. So if you feel you're a good fit, go ahead, apply, 7 days free. Okay, no, it's not going to charge you anything. And I see you guys in this. And that's where I'm personally going to cover your questions along with my team who works 24/7 for your support, okay, to help you out with your best, with your worst nightmares and trading decisions that are really hard for you to make. And before I go, make sure again to smash the likes button if you appreciate and enjoy all that I shared, guys, with you today. It really cost me a lot of time, actually. This is Friday night again, so if I survive to the next week, this is going to be good. So pour all those likes, pour all those thumbs up, pull all those comments, smash the like, smash the subscribe. And I see you guys with your notifications on the next daily content series. New videos coming every single day on our YouTube channel. Make sure, guys, you are part of that experience. And that's all I've got for you today. I hope you are guys staying safe. Enjoy your weekend. God bless you. Love you all. Bye-bye.